Home prices rising in June, but at a slower rate than previous months. That's according to the S&P Case-Shiller. Now, on a national basis, single-family home prices increased by 5.1%. That's down from 5.3% in May, so just a slight tick down. But even with the slowing prices, is real estate, residential or commercial, a better investment than stocks? Let's bring in the CEO of Marcus & Millichap, a commercial real estate brokerage firm, Hessam Nadji. Hessam, I would imagine, given where you work, you like commercial real estate. Is that right?
Good afternoon. Thanks for having me on the program. Yeah. Absolutely. And that's really a reflection of what we're hearing from our clients. Investors all over the country are basically telling us that when they look at their alternative choices for investing capital and having a long-term viewpoint, commercial real estate really keeps standing out because of the yield profile. You can expect a 5 to 7% yield on average across all the different property types within commercial real estate. Unlike past recoveries, we're not overbuilding commercial real estate. There's been a natural barrier to overbuilding because of tight lending and expensive land prices and construction costs. And on top of that, you're expecting very good rent growth still looking ahead over the next 3 or 4 years because of the fact that the economy, although slowly recovering or actually expanding now, is not overheating. Therefore, there is not a lot of fear of inflation and extreme rises on the interest rate side.
So is that one of the hottest areas, essentially apartment buildings, because we know that home ownership in this country is at lows that haven't been seen in some 50 years. More people are renting, so it makes sense that more places to rent are needed.
Exactly, and this is a combination of both a consumer preference because of our demographics and the millennials having a whole different set of preferences than the prior generations, and also a little bit of an afterburn from the housing crisis that we just lived through in 2007, 2008. We still haven't really recovered psychologically from what happened during the financial crisis, and because housing was such a central point of that. Having said that, if you look at the residential supply-demand dynamics, we're creating 2.5 million jobs a year, steady as she goes. But more importantly, the supply side of housing, just like commercial real estate, has also pulled back. Construction starts for houses are 60% of the prior peak. So we're still way off from the overbuilding times that we experienced a few years back. And that's what's giving both the residential and commercial market time to really stay in balance and perform very well.
Very good. You made your case. Well, we're already out of time. Hessam Nadji, Marcus & Millichap Chief Strategy Officer.